Frank says you've got your hand raised. If you have a question, you're actually unmuted if you want to try to say hi.
Hey, Jason. Hi, investors. This is Dean Gallagher. Thank you for coming into the webinar.
How's it going, Dean?
Oh, it's been fun today, Jason. Thank you for getting us out of some profitable trades there. I appreciate it.
You're welcome. Frank, what questions you got, bud? Your microphone should work. It says it's on if you want to try talking.
Okay. All right. So you can hear me?
Yes, sir.
Okay, good enough. First of all, nice to meet you. I mean, even if it's by voice. And I just kind of tried to get the hang of this because I'm looking at your portfolio, and I want to make sure I get comfortable with it before I invest anything.
Sure. Yeah. Well, today we'll cover how it all works.
I want to watch and listen and learn, so I can I can get comfortable with it, and then maybe start making some moves.
Yeah. Great. We'll certainly cover all of that today. Have you ever traded options before?
Yes, I have. I mean, I'm not saying that I've been very profitable, but I'm not too bad.
Okay.
Although this month it destroyed me, but that's okay.
Well, no worries. I'll do a quick overview of the program, how it works, and then we'll see what kind of questions you have after that. All right?
Sounds great. Thank you. Yeah.
Yeah. Thanks for saying hello, Rakesh. Welcome to the webinar. So yeah, everybody has a live chat that they can chat with, or if you want to speak out loud, please feel free. I've unmuted everybody, so definitely can unmute at any time. Well, let me just give you guys a quick overview of how the program works. We'll let Dean talk about his experience, how he became involved with us and started taking the trades himself. And then we'll open it up to you guys and try to make sure everybody understands how this all works. Rakesh, I noticed your mic is unmuted. Do you want to say hello? All right, well, let me go ahead and get this going here. And oh, we got Tom. Tom, welcome to the webinar. Notice you just joined in.
Thank you.
How's it going, Tom?
It's going pretty well, thank you.
Excellent. Anybody take our SPY trade from yesterday?
I did.
All right.
How many shares do you have now, Tom?
I just have one SPY.
Okay, so 100 shares in one contract?
Yeah.
Okay, nice.
Been doing one contract for a while, and then I'm relatively new, and so I'm getting my a comfort level before I go up one more unit, but that's fine.
Yeah, and Tom, that's what a lot of our members do. They'll start with 100 or 200 shares, and then, after 2 weeks, they'll scale up a little more, and after a month, they'll scale up a little bit more, and then, next thing we know, two months into it, they're using 1,000 shares or 2,000 shares, and having a ball with us. So
yeah,
we look forward to getting there with you.
Okay, great, guys. Well, I just want to quickly go over how to follow the program. I'll look at the last 3 trades we did in each strategy, and then we'll see if we got any questions for you guys. So first of all, the whole point of this program is to make life easy, simple, and safe. And so depending on, number 1, how much money you have to invest, and number 2, how often you want to trade, we have a few options for you. So I would say my best clients typically, they really don't mess with the trade alerts. They don't try to jump from one strategy to the next. It's kind of like, I don't know what a good analogy is, but I always think of you know, those girls that they have a nice boyfriend, they're doing really well with them, and then they leapfrog to a new lily pad because they think it looks a little bit better over there, and they're constantly hopping around. And what I've noticed is people who do that, they try to chase the last profitable trade. They end up losing money because they get out right when we had a big profit and follow that trade, and then the other portfolio brings in the profit. So really the people who seem to do the best are just, they're doing the trades as they're issued. They're not trying to manipulate it, and they're following the correct allocation of capital. And so if you did want to follow our whole program and had at least $100,000, this is the kind of the outline of how you'd invest. You'd have 100 shares of the SPY, Monday, Wednesday, Friday, noon Eastern. It's a 2-minute trade. There's never, ever, ever any work outside of the trading period. So we design the trades to have a maximum gain and a maximum loss. And then we're just going to have to be happy with that until the next trading period. And what that does for you is it allows you to know, all right, noon Eastern, Monday, Wednesday, Friday, I'm trading the SPY, and that's it. That's all I have to worry about in my life. Tuesday trade is currently Facebook. Whenever the stock market's dramatically sold off, I'll probably buy up something like Facebook or Apple. Once we get back towards nose-bleeding prices, like 300 on the SPY, expect to rotate that Facebook into Microsoft. And then once we've broken past 300 on the SPY, most likely into that 305, 315 range, expect to rotate into silver on the Tuesday trade. So that would kind of be the cycle to expect on the Tuesday trade with the current outlook on the market. And then meanwhile, it's important to have a huge position in the bonds, in the TLT. That's a U.S. Treasury 20-year plus product. And it essentially gives you the ability to make a lot of retirement income playing the credit market in the U.S. Treasury, which has been a very consistent bread and butter moneymaker for us all year. So I'll show off the returns on that one in a moment. And then on top of that, we're currently recommending a 10% total allocation into inflationary hedge products. So GDX is the easiest way to do it. That's the gold miner ETF. We were in GLD for the last several months, but now that it's pretty clear there won't be a trade war resolution, it's pretty clear the banks are going to lower rates, support their bond markets. That's going to create a lot more money in the global monetary system, and that's what drives up gold. So despite the dollar continuing to be strong, we're also expecting gold to rise. So that's the breakdown of that. Now, some people don't want to trade the Tuesday play. They'd rather have the super safe SPY, and I don't blame them. The SPY has a lot of benefits, namely that it has 3 option expirations a week, and it's extremely diversified. Very hard to put a dent on the SPY, but an individual stock can have a lot more volatility. So for folks who have a little bit less to start with, or they just don't want to trade the Tuesday trade, here's how you can allocate your capital. You'd have 100 shares on your Monday, Wednesday, Friday trade, and then 200 shares on your TLT trade. And then you'd still want to have 10% positioned approximately in gold. And so that comes down to 200 shares of GDX. Now, this has become a popular kind of enhanced portfolio. The Tuesday trade has more volatility, but it has generated far greater profits than the SPY. And so for folks who just want to trade twice a week and only want to start off with a little less than 40K in capital, you can do this strategy where you trade Facebook or whatever trade we have on Tuesday, currently Facebook, with 100 shares on the TLT. So again, we like to be half equities, half bonds. They work very well together. And then you drop down to 3.5K in GDX. So that gives you 3 options of how to follow the trades, depending on how much capital you have to start with and how often you want to trade. So are you happy trading 5 days a week? It's only 2 minutes a day. It's not a big deal. This portfolio is probably your best bet. If you want to get rid of the Tuesday trade, have a little less risk, a little less capital up front, this is a great strategy right here. But you're still working 4 days a week. It is only 2 minutes a trade, but does simplify your life a little bit. This is a very popular combo right here. And most recently, we've had a lot of people wanting to do this program where they just trade Tuesday and Thursday. So the least work, you're going to get a little bit more volatility in the equities return. But when the market's trending and we predict the move, we make a lot more money on the Tuesday strategy than we do. Okay, so that's a review of how to allocate your capital. Let's take a look at some recent trades. Okay, so here is how I have our model portfolio allocated. You can see that it has 38% in the SPY trade and then 39% in the bond portfolio, with only 12% in the Facebook currently. So it does have a little bit less. This portfolio has almost outperformed the SPY 2-to-1. Not quite, and I'll show you it's had some pretty big losses and drawdowns to obtain that return. So it's not that it is just better, it does have more risk, so it can generate more return. Precious metals portfolio has been very profitable, but again, this is only representing 10% of the total portfolio, and it's not something you'd want to go all in on, even though it's had such a huge return. We'll talk about why. And meanwhile, this bond portfolio has been extremely resilient. It's generated a lot of profits. Whenever the SPY has let us down, we've had the bonds in there to make up for the returns. Now, combined, here's what our return looks like. And I want to point out that these returns are generated with financing put options below the assets, which costs money. So we're paying a lot of our profits for downside insurance, number one. And number two, we're selling call options. So that limits our upside potential profit. So at the end of the day, we're kind of taking the pain out of the downside, but we're giving up some of the upside. And at the end of the day, you have very little risk on any given trading period. So somebody might show you a track record like this, and they bought and hold some assets, and they had huge volatility, they had huge drawdowns, they had big winning periods, they had big losing periods. That's great for young folks who want growth. This strategy has delivered these results with the opposite, with extreme protection, so we could never, ever lose very much money in any given trading period. So from a hedge fund point of view, these returns are a lot more impressive to serious investors because we generated profit with extremely low risk. And that's a big difference than someone who's going out there taking big gambles and getting lucky, or potentially hanging on to big losses only to come up because they got the call right, but they had to sit in 5%, 10% drawdown to get there. Okay, so when you do overlap our strategies, we've only had a single losing month in July of -1%. Other than that, it's been a slow, consistent 1 to 2% return per month. The only month we've outperformed that was in June. If we look at the returns broken down per product, or rather per trading strategy, the SPY has done very well. It had a losing month in May and July. July, I was actually expecting this whole trade war tariff escalation to begin. So I was positioning us to earn an extra profit if it went down in July. I was a month early. So all this escalation didn't happen till the middle of August. So despite that, very happy with these returns. And because of the big profit we generated just on the most recent set of trades, we now went from a negative in August up to a 1.2% return, really just because of this big pop in the last several days, and we predicted it. So that's your SPY return on a monthly basis. The equities portfolio too, again, it has a better profit, but it's had bigger drawdowns. And you can see in December, we had a negative 4% return. That was during the Christmas massacre. We made it up in January with a huge 7% return. That's almost the return of the SPY program for the whole year in a single month. So that gives you an idea of the pros and the cons of this portfolio. Then it's racked up 3%, 3%, 1.5%. A little bit bigger losses in May and July. So the same months we lost in the SPY, we also lost in this program. And now it's sitting at a 2.3 in August. Now I suspect if Facebook does what I suspect it will do, this will have a very strong return in August, September. Moving along, our precious metals actually is up 200%. But what I want to indicate here is that when we launched this portfolio in December, it only represented 2.5% of the total portfolio because the positioning of the central banks was completely opposite. Going into December, Jerome Powell told us that we have hikes on the rates on autopilot and quantitative tightening on autopilot, that they were going to get the rates back up towards 3 to 4% and sell off something like $2 to $3 more trillion in treasuries. Of course, they could not pull that off. The stock market puked its brains out in October, November, December, told the bond market they're not going to put up with this. And by February, we had the monumental reversal in the Fed. First, they said they're going to stop the rate hikes and maybe slow down quantitative tightening. Then by July, they actually dropped the rates by 25 basis points. And now we're expecting in September another 25 to 50 basis points. We saw them buy up a bunch of treasuries last month, which wasn't even talked about in any of their speeches, so that's a little bit peculiar. I think they're trying to fix the shape of the yield curve to prevent people from freaking out. And so anyways, we've been adding to this portfolio capital and have gone from a 2.5% position all the way up to a 10% as of last month. Now that's quite clear. There's no end in sight to the US trade war. I think we have a period of peace coming up that will be followed by a massive escalation going into the 2020 election. So that's why we've been gradually increasing this. We've had some huge returns. We started off just owning Bitcoin, and as the outlook for a dovish Fed became more and more clear, we've began adding positions into gold and silver. And so this has had some big swings, 12% loss in January, some outlandish returns in February, March, April, May, and June, a negative 11% loss in July. And I think it'll be a relatively slow August and September until we get some sort of note back from the Fed that they are going to lower rates and start quantitative easing. So as soon as that comes out from the Fed, I think we're going to see the real run-up in gold occur in tandem with more escalation with the trade war. Bond portfolio, no huge returns. We had a big 3.1% return in March. Its only losing month was in February. Other than that, it's done its job to protect the equities from drawdown and help balance out the returns. I'd like to point out you get a link to this track record in every alert so you can go look at it. We also have all the trades on the website, so you get a link to that if you want to go look at every trade alert we've ever published. It's broken down per group for you, so if you want to go do some investigative work, you can do that. All right, let's take a look at some recent trades. And we'll open it up to Q&A. Now let me see, I think, let me check to see if we have any questions here real quick. I think we got a few new people in. Karen, how's it going? You getting ready for that hurricane? Andy, I noticed you joined. Welcome. I've unmuted you if you want to say hi. Any questions out there so far, guys, before we jump into some of the most recent trades?
Yeah, Dean, I have one, Frank here.
Yeah.
On the SPY trade from Monday, Wednesday, and Friday, right?
Uh-huh.
So you selling calls on the SPY, correct?
Yep.
And I mean, are they weekly calls? What's the expiration on these calls? How long you hold these positions?
Okay, so the SPY has option expirations every Monday, Wednesday, Friday.
Uh-huh.
So we're selling the call option to the closest expiration, but not the same day, obviously. And then
Okay.
we're put. So here's the most recent SPY trade. Let's just take a look. This is actually one of our most profitable trades to date. So again, this is a bigger return than normal, but shows the potential. So here is the trade from yesterday, and so you can. Here's how to do the math. All you got to do is really two things. One, when you enter the trade, don't pay attention to what you originally paid for the SPY, because we're trying to make profit 3 times a week. So from Monday to Wednesday, Wednesday to Friday, Friday to Monday, we're trying to generate profits over these periods. Now, sometimes the SPY gives us the profit. Sometimes the put option gives us the profit. And sometimes the short call option gives us the profit. It depends on what we think the market's going to do. So, for example, in this trade, I believe the SPY was going to go up in value. And so when we put this trade on, you can see the screenshot right here.
Uh-huh.
What do you see for the last trading price?
So over here, okay, so you got 288.41 for the SPY, right?
Yep. Okay, so on this trade, here's what I agreed to with my options. Step 1, expiration of August 30th, I agreed to sell my SPY shares for a price of $291.50 for a price. I'm giving someone that option to buy my shares at $291.50 if they pay me 59 cents a contract, or rather $59 per contract, 59 cents a share. So if you look at that, that basically means I'll get the profit of subtracting $291.50 from $288.41. So that's the increase in the SPY I'll get. Plus, if they do exercise their right, I get to keep their 59 cents.
Right.
Now, on the downside, if I'm right and this trade goes in the right direction, if it goes up, the put option I bought will lose value.
Correct.
Okay, so this chart gives you an idea of what has to happen to make the maximum profit. So basically, to boil it down, we have to go above $291.50 to hit the maximum profit. And that profit's going to be a maximum gain of $298 per contract. Now that's a huge profit. We're actually trying to average closer to $25 to $50 profit per trading period. And if we do that, that turns into about a 1% to 2% return per month. So currently this trade is up $300 a contract. Let's look at the SPY right now.
Okay.
So here's an example of where we would have made more if we just bought and hold the SPY, but we're not trying to do a growth strategy. We're trying to have extremely limited risk to the downside and to finance our insurance with the call options and sometimes make profit from the call options.
Right.
So you can see the SPY leaped up from that level yesterday to 292.71. Okay, so that's that means we have a $3 profit per share, but we stopped earning profit after we went above $291.50. So we're already $1.20 above where we needed it to go to get the maximum profit.
Okay. So you're going to let the put expire worthless?
Yeah, so in this case, the put will expire worthless, and we generated the profit from the SPY increasing in value. So in this trade, we'll actually lose money on the short call, we'll lose money on the put, and we're going to make money on the SPY.
Gotcha. Yeah.
So in some depending on what we think the market's going to do, I adapt your option contracts to maximize profits and limit our risk. So I'll never, ever give you a trade that does not have a put option protecting the asset below. Okay, so that makes my job much more difficult to generate returns because I have to give up a good chunk of my profit with your insurance.
Yeah.
Okay, that's the whole benefit. That's what makes this program really special, is that we're generating consistent returns for our clients with extremely low risk. We call them atomic bomb-proof trades. All hell broke out. Trump decides to ban Huawei. Chinese dump their treasuries, sell all their stocks. The banks decide they want to get Trump out. They don't want to lose their relationship with China. Scandals break out left and right. Who knows what happens? SPY drops 50 points. We don't care because we own a put option. By owning that put, we get a guaranteed 284 minimum for our SPY shares.
Right. Mm-hmm.
So that's a look at our SPY trade. Now, just in general, if I think the SPY is going to go up quickly, which is what I think is going to happen over the next several weeks, maybe even months, then we're going to be set up to generate the profit from the SPY itself. Now, on the other hand, if the SPY was trading in the 300 to 315 range, I'm going to think it's going to start slowing down. I'm going to tighten the collar. It's called an option collar. And we might start making money from the put or the short call, and the SPY might actually lose value. But we can adjust the options to generate a profit in that environment. Right now, the picture to me is pretty clear that the SPY will aggressively travel higher until the trade war escalates. And so my daily live stream really goes into the details of how I make those predictions. But yeah, if we just average $25 profit 3 times a week, 52 weeks a year, that works out to 13% return per year, or about something like $5,000 a year of income per 100 shares of SPY. Now, this is a $300 profit over a period. So that's 2 weeks of profits in one trading period for us.
Right.
So we don't win every trade, and that's certainly not the case. But when we do lose, it's usually very little because we have all these protection mechanisms in play. So anybody have a question about this most recent trade, how it's earning the profit of $3 a share?
Also, it's me again. And so in order to get all 3 days in, you would have to have 300 shares of SPY, correct?
To get $300 profit?
No, I mean to get, like, if I put like a trade on Monday and I want to put another one on Wednesday, but I only have 100 shares, I can't do that, right?
No, you absolutely can, Francis. So what we do on Monday is we're going to open. Let's say you start on a Monday. Let's say you start next Monday. You start following the system, or if you want tomorrow. Okay, but let's use Monday as an example. What you would do is buy 100 lot shares of the S&P 500. Okay, and then you're going to add the collar to it. Okay, to ensure you have a defined downside and a defined upside as well. Okay, and like Jason said, you actually have your insurance, and so
I think it doesn't get Dean is how he gets out of the trade so he can do the new trade.
Yeah, I'm getting there. So so that's what you do on Monday, right? You buy, let's say it's 300 shares of SPY. Okay, you'd then get 3 contracts of the covered call, and then you'd finance your puts with the premium from your covered call, right? Okay. And then so we ride that trade from Monday to Wednesday. Okay, and then when you get the trade alert on Wednesday, the first part of the trade alert is going to be closing out the options that we put on Monday. Okay, and the second part of the trade alert is going to be issuing your new collar scenario. Okay, your collar engineering for the next Friday. Okay, And so you're only going to have, let's say you had 300 shares, you'd only have 3 contracts at any one time for the covered call and the put. Does that make sense?
Yeah, I had no. The thing was that I couldn't do all 3 of them with just 100 shares. So you're saying that by Wednesday I can actually just almost close that position and just do the one for Friday, correct?
Exactly. Yeah, and so we always open and close every single time. So Monday, Wednesday, and Friday, we're gonna open and close the trade. Okay. So I guess step 1 would be close the previous trade. Step 2 is add the new column. Okay.
Uh-huh.
And then we just rinse, wash, and repeat, and do that all year long. Okay. Except for next Monday because we got a market holiday.
Right.
But yeah, that's what we do, and it's fantastic that the SPY has created those 3 weekly option expirations. Okay, so that just basically allows us to create more income compared to where if you were playing just a single stock or
Right.
any other ETF. The SPY is the only one that has 3 intra-week contracts, and that's it's the most liquid thing in the world. And if you don't have some in your portfolio now, I would absolutely add some if you're over 55 years old.
Yes, I am.
Okay.
I definitely had that. So, yeah. Okay, thank you for the explanation. That's good.
Hey,
Yeah.
my pleasure. Sorry, Jason. I just figured I would jump on that while you were pulling up all the charts.
Sure, yeah, no worries. Okay, so here's how we get out of that trade tomorrow. Okay, so here's how you do your math. So SPY went from, let me get my calculator out here. So this is how we would get out tomorrow. But remember, the more time premium that has expired, the more profitable the trade is. So this may show us making a little less than that $3 max. So if we look at our profit chart, it's saying the most we could make is $298. Pull that document back up.
Mm-hmm.
So yeah, we have to close out the position and then enter the new position. So here's how you do the math on this one. So right now, if we were to close it out this very second, we're at 292.61. We're going to subtract the 288.41. So we're at 420 on the SPY. Now, getting into the trade, we had to pay 11 cents. So I'll subtract 11 cents. And now to get out, I'm going to have to lose another $1.76. I'm going to subtract another $1.76. And so currently we're up 233 on this trade. Now by tomorrow, it should be up more because the time premium value will have expired on that short call. And it'll get right up close to that 298. So we're up $233 a contract on this trade. Now let's just pretend, for the hell of it, we wanted to, let's pretend that we wanted to trade it again today and close it out, let's say for next Wednesday. And we thought there's a huge move coming up on the SPY. Let's just see how we might set up that trade. Okay, so this could possibly be tomorrow's trade. We'll see what it really turns into tomorrow. But depending on how confident we are on the underlying asset going up, depends on how loose the call is. So this would be a pretty loose collar, and I probably wouldn't put you guys in a position where it would be this loose. But you can see the maximum risk is $745, and the maximum profit is $350. So for me, that'd probably be a little too loose. I don't want to ever risk that much on the downside.
Mhm.
So, all right, I might say, okay, that's too risky. Let's tighten the collar $2. All right, now that seems a little more reasonable. I stand to make $3.30 per share, and I lose up to $5.60. So this would probably be the most aggressive trade I would possibly put on. And if I was feeling a little bit more anxious, maybe even go up to that. So now you can see as we tighten the collar, we're reducing our downside risk to whatever point we put the put option, but it's eating into our profits. So this particular setup I actually really like, and it could very well be what we put on tomorrow.
Okay.
And you can see it has a defined risk and a defined profit. We know exactly what has to happen to hit the maximum profit. You got to trade above your short call. So you'll see that's always where it lines up exactly. So at 296, we hit our maximum profit. And after that, we do not enjoy any other profits on the SPY. The person who bought our call option, he gets to be the benefactor of any profits above that level. But up until that point, we're making very nice profit. Now, on the other side, if we're completely wrong, stock market crashes, well, our losses are, A, we get to keep the call option we sold, so that makes the losses less than everyone else. And then B, we're long a put, so that also reduces our losses. And once we get to the level of the put, that the losses stop, so right at 288.
That's
You can see
very,
magically, once the SPY goes below 288, we can't lose any more than that. Now, what if we thought market was going to be a little flatter? Well, we might do something like this. So here's a trade setup where as long as we stay in this area, we're going to generate a nice profit. And so you can see if we tighten up the collar to some degree like this, now we make money in a flat or up market and only really lose if there's a significant pullback. And maybe this would be a little bit better up here. So you can see as we tighten the collar, we make less, but our risk becomes less. So in a flat market, we might do something a little more like this. And if we thought the SPY was going to travel lower, it's as simple as flipping the collar. So we go like this. So here's a setup where if we're raw, if we thought the SPY was going to crash from here, let's say the SPY is now at 330, it's just at nose bleeding prices. Trump's going to have the courage to raise the tariffs. You know, we know what's going to happen. Second, this thing gets overpriced, look out for more escalations in the trade war. Well, if we sell the 288 call and buy the 292 put, look at our risk chart. If the market goes higher, we lose 88 cents a share, big whoop. But trade war escalates and we get a sell-off, we're making $3 a share. So depending on what cards have been dealt to us in the poker game, we will adjust those option contracts to make the best of the situation. Now, right now, pretty straightforward. I'm expecting stocks to go up, bonds to stabilize, and gold to stabilize. And so that's kind of how we're positioned right now.
okay.
See, what other questions we got out there, guys? Who's thinking about trying out the SPY trades?
Okay.
What about you, Frank? You got any questions on how this all works?
Yeah, I mean, it's to be honest with you, I never done anything this. I mean, it might appear to be a little complicated, but I'm sure that probably with a little practice, since I have been trading options, you know, for a couple of years, it should, you know,
Yeah, yeah, I think you'll see.
And I sometimes adjusting the positions. That's what probably a lot of times gets me confused.
Yeah, so we're not going to ever be adjusting the position. So here's all you got to really do is Monday, Wednesday, Friday, you show up at noon Eastern.
Okay.
Okay, Trade Alert's going to have a picture of what to do. But I can tell you the process is always exactly the same. From the previous trade to get out, we're going to buy to close the call, and we're going to sell to close the put. Now, worrying about the strike price is my job. Your job is just to accurately follow the trade, okay? The next part is always going to be the same. We're always going to sell to open the next call, and we're always going to buy to open the next put. Now, again, picking the strike is my job. You'll understand why I'm picking it over time. But again, that's why you're paying for the service, is so that you have an expert figuring out what makes the most sense for that trading period. Okay, so we're always going to start off. We're going to restart the trade by selling to open the call, buying to open the put. The expiration date will be Monday, Wednesday, Friday. Okay, and that allows us to generate consistent income over each trading period with limited risk. We're not going to just jump into to the SPY or any other asset without put option below, which is going to be financed from selling a call option, usually above. Now, sometimes a call option can make income. Sometimes a put option can make income. Just depends on where we put the strikes. 90% of the time, we're going to sell a call option above the SPY and buy a put option below. But your job will never change. Monday, Wednesday, Friday, you're going to come up here. You're going to buy to close, sell to close. Now you're only holding the SPY. The same day, you're going to sell to open, buy to open, go to the next expiration. Change the strike to whatever we give you. Wait till the next Wednesday, next Friday. Buy to close, sell to close. Okay, that gets you out of the option contracts. Then we're going to sell to open, buy to open, go to the next option contract.
Got it.
Okay, so that's it. So there's no adjusting. There's no emergency alerts. There's no surprises. The asset's never changing. So it's always the SPY. Now, what happens if you get exercised? With our setup, you end up in cash. You get the maximum. If we ever get assigned, here's what happens. Your short call is exercised, so you get the maximum payout. You get to keep the option contract premium, plus you get whatever strike we agreed to sell our shares for. So if we ever get exercised, that's time to celebrate. You got maximum profit. Your put option will probably expire worthless. Okay? We're not going to buy the SPY back on a Tuesday. No, you wait till Wednesday, wait till noon. Trade alert comes out, buy the SPY, put on the option contract.
Okay, I got you. Yeah.
Okay, so
of course, the 100 shares are going to be taken away from you. I understand, yeah.
Yeah, so it'll never be more complex than this. Buy to close, sell to close. Okay, now you're just long the SPY.
Okay.
Sell to open, buy to open. Go to the next expiration.
Okay.
That's literally how much work it takes to follow the program. And the result is now that you have extreme protection, and you're probably going to have a better portfolio. Let me ask you guys this. Who out there right now owns any stocks?
Well, I do.
What are some of the stocks you own?
I have some Intel, some Microsoft, some actually I have a couple leaps on Apple, and some AT&T and some Verizon. That's about it.
Okay, so right now, now let me ask you this. Do you own any bonds or gold?
And I have actually a call on GLD expiring, I think it was in January 2020.
Okay, now do you own any put options?
No.
Okay, so your portfolio right now, if China, US become best friends tomorrow, you got a great portfolio. Your long equities should do great. Who cares what you own? You could throw a dart at a dartboard and probably do wonderful. But what happens if China does not want a trade war to end, and they want to try to get Trump out of office? How do you think your portfolio is going to stand up during the next round of trade tariff escalation? You think you're going to do well?
Probably no good, right?
Probably not good, yeah. So with our strategy, first of all, so here's the smart move all of you guys can be making, even if you never join our program. You shouldn't own specific stocks. You don't have enough capital to really build a really great portfolio that way. The SPY ETF does a much better job of that than you ever could. So it has 504 companies in it, and it's automatically rebalanced by a formula they use to determine what percentage. So Microsoft's the biggest position, but it's only 4%. So think about that. Almost every hedge fund around the world has failed to outperform the SPY. So in terms of whatever it is you own for equities, you should really consider just buying the SPY. Sell everything, buy the SPY. You're gonna have better diversification in terms of your equities portfolio, and it's automatically rebalanced for you. These guys with almost no fees are rebalancing your assets underneath the SPY automatically. Okay, so this is by far the most important security in the world on the equity side. So that's an easy move everybody watching this should consider making, regardless of what exactly you're going to do with our program. Number two, when the SPY goes down, usually the TLT goes up. In general, they're traveling up together. And when you look at the big macro view, money is flooding back and forth between the US stock market, the US equity market, and the dollar. So by balancing your portfolio, half stocks, half bonds, in the middle of a trade war, it makes a lot of sense. And the TLT has been one heck of an easy ride for us in this environment. Okay, now in terms of getting some protection from inflation, what happens if all the banks keep printing money, the governments keep creating deficits they can't pay for with taxes? We're gonna get inflation. We're already seeing it in China. We're already seeing it in these smaller countries that are having weak currencies. It's going to make its way to the US, and that's when we're going to see the real run up in gold. So this allocation makes a lot of sense. Now, how do we take it a step further? Sell the call option, buy the put option. Okay, from our point of view, selling call options like taking candy from a baby. It's a bad bet. Most of the time, call option buyers lose money. So we're happy to just own the asset, sell the call option. That creates consistent source of income. On the other side, if things go wrong, we don't want to have a big hit. So I'm much happier to make a smaller return over and over and over again if I can avoid blowouts to my portfolio. So when you follow our program, you always have a put option. Always. Okay, we don't buy the put option usually to make money. We buy it to avoid big losses. So when you split up your portfolio like this, now all of a sudden you have three things you have to worry about: the SPY, the TLT, and GDX. Your life is simplified. You're going to have downside protection. So if all hell breaks loose, you can't lose much. You're going to be taking advantage of the call option market by selling calls consistently for income. And it really makes a lot of sense. So think about, how are you positioned right now? Are you just long a basket of random stocks? If so, is that really the best strategy to go into retirement and to generate consistent income? And are you prepared for the US-China trade war to escalate after this period of probably a couple weeks of peace? Because if you're not, here's your formula for success.
Yeah, sounds good to me right now. So yeah, thank you for the, for the explanation and everything. I really appreciate it. But,
yeah. Hopefully this is all starting to make sense. Do you feel pretty confident that you know how to get in and out of the?
I have to do some work. Yeah, definitely.
Do you feel confident that you'll be able to enter and exit the SPY trade every Monday, Wednesday, Friday at noon Eastern in just a couple minutes?
I probably could do that. So tomorrow you also having the trade for the SPY, right?
Yeah, Monday, Wednesday, Friday, we trade the SPY. Tuesday, we're currently trading Facebook, but I will rotate into Microsoft when I think stocks are getting expensive. And then I'll rotate into silver when I think we're prime time for another trade war escalation.
I got you. Yeah.
And then Thursday, we exclusively trade the TLT. And so you'd think, well, why don't we just do it all at once? Well, first of all, a lot of analysis and thought goes into each individual asset. So for my job, I can do all of the analysis on the SPY in one day, quickly take the screenshots, get it out to you guys so you have very fresh prices and be able to follow that. Analyzing the bond market is very correlated to the equities market, but it allows me to put all of my attention and focus onto the bond market on that Thursday to try to predict, where is yields heading for a week over week period, and how is that going to protect the rest of our portfolio with how we put on that trade. So it makes it so that you only have to deal with one security per day, either the SPY, the TLT, or a specific stock if it's a Tuesday. And then on the other hand, it allows me to put my full energy into that specific security for that trading day.
Right. One question I also have for you, then, it's what platform are you using for trading?
I would recommend you use interactive brokers to.
Oh, is that what you're using?
Yeah, because they only cost $1 a contract, so it's just so cheap. And
Yeah,
also very expensive margin.
Actually,
Our clients will use margin because we're not trying to make a big return and we have absolute protection. This is actually a program where you can use some margin from your broker, and it's not a big deal.
Yeah, well, and I mean, is there any limitation trading into within an IRA or what?
Yeah, you can do this in an IRA.
Yeah.
What's really nice about doing this in an IRA is that you don't have to pay the short-term capital gains on every single little trade. So you can compound your profits without having to pay the old tax man, and then just pay one tax at the very end when you do start collecting your benefits. So certainly this is very, very optimized system for an IRA because you're not having to shell out 35% profit on every trade. You can compound your profits, let it grow, and then cash out.
Yeah. Okay. Sounds good to me. All right. So what else we got here?
Yeah. So folks who like to basically what it boils down to is people who want to generate consistent retirement income and they hate losing. That's who really gets attracted to this program. The people who are less interested in it are more of a risk taker sort of personality. They hate missing out on big gains. They don't mind a lot of drawdown. In fact, they're the kind of person, who doesn't like this program. They're down 10%. They're going to double down. Oh, they're down 30%. Let's triple down. They're the kind of guys who like to blow out their trading account. Sometimes they get lucky. They make a ton of money. They love it. That's not this product. This product's the opposite. If you're the kind of guy who loses a little bit and you're really turned off and you just want to give up, that's the kind of folks who love this program because we have such controlled trades, very little risk. Half the time we're missing out. We're getting the predictions right. We're making money, but we're making less than we would have if we just owned the asset. So that's the downside is we're going to give up some of the profits to have this extremely conservative, safe system.
Nice. Okay.
What other questions we got out there? Rakesh, Tom, Andy? Anything you want to add? Eddie? Karen? Oh, Karen, you're muted. I unmuted you, Karen. Eddie's got a question. Let me see. There you go, Eddie. You should be able to talk now. Oh, Eddie's fine. Eddie, what kind of portfolio you got right now? Are you all in on stocks? What's your biggest position? Do you have any bonds, any gold? What's your biggest single position in the stocks?
Fuck you.
Alibaba. Wow. That's a ballsy
Ooh.
one.
Whoa, that's scary.
Yeah.
Yeah, that's about as risky as it could possibly get right there. So,
Hmm.
Eddie, what's your goal? You're just hoping the U.S.-China trade war resolves itself and catch a big win, or? Uh, let's see, who else is out there who wants to, he's trying to reduce uncertainty. Yeah, so Eddie, I would say that's probably the single riskiest company. Now, if you got to understand, the Chinese think that U.S. is fat and lazy. They think that, we're 200 some odd years old. They're 2,000 years old. And their core goal here is to take back the supremacy of the leading population in the world. So I don't think they're going to make any trade deal with the U.S. And if they do, it might be just small little things here and there. But it seems quite reliable that they intend to try to take the U.S. down with it. I kind of think of it as, you got your little brother who's, bugging you, spitting, who knows, splashing you, throwing you with the ball by the pool, pissing you off. That's kind of what China's been doing to the U.S. in terms of stealing all our stuff, ripping it off, subsidizing products, all kinds of nasty things. They've broken every promise they've made for the last decade. And so America's mad, and now they're going to push them into the pool. Little brother's getting pushed into the pool. Little brother has decided to latch onto your arm and says, all right, you want me to go down? You're going down with me. And so we're at this pivotal point where we're kind of hanging in the air. America's hanging on to China. China's hanging on to us. And it looks quite clear what's going to happen next. We're both going to fall into the pool together here. So careful with being long Alibaba. That is extremely risky.
Yeah, Eddie, and if you want to talk after, I'd be happy to walk through everything in your portfolio. Just give me a call, okay, bud? I'd be more than happy to walk through everything with you and see how we can help and get you in a safe place.
This is Tom, and I have a comment.
Sure.
For you, when somebody calls and asks about a broker, you got to inquire if they are either a first responder or military or retired military, because TradeStation has free. You only pay the taxes, whatever it is, but
Wow, that's
options are free, in and out.
Wow, that's good to know. Thanks, Tom.
Yeah, I've never heard that, Tom. Thank you. That's really cool.
So military and first responders get that. We
Cool.
sign up with TradeStation.
Now, you've been following our trades for a little while, right, Tom?
Yeah, I think I joined, got a lifetime membership about 3 or 4 weeks ago.
Okay, cool.
And would you change my name on the regular program to Tom, because my name is William Thomas, and you got William on one and Tom, and I prefer Tom. So
Sure, yeah. Let me. Now, where are you seeing that pop up as William in the?
no, on the other day, yesterday, what when it pops up on
And the name on the registration form. Okay, I gotcha.
register, yeah, this one you say Tom, and on the members day it's William.
Oh, okay, yeah, I'll get that fixed. No problem.
Okay, minor little thing, but
So how many shares you got on the SPY from yesterday's trade?
I have 100 shares, and I've been trading that, I don't know, for about 5 or 6 cycles, and I'm just about to break even. I screwed up about the second trade. I screwed up.
Yeah, I remember that, Tom.
It's slowly coming back. It does work. I can see that it does work. It's just underwater right now by a little tiny bit.
I remember,
That
Tom,
was
you
my
missed
fault, not yours.
Right, you missed that one from Friday to Monday that made $280 a share. I remember that. I remember speaking with you after that. Well, cool. Well, yeah. Once you follow everything accurately over the course of the month, statistically, you have about a 92% chance of being profitable at the end of the month.
Yeah.
And and then as you build confidence and trust with us, you can scale up to a couple hundred shares, and and like some of our members scale up to all the way up to, I think we had someone with 3,000 shares, right, Jason? I think Ray has 3,000 shares of SPY now.
Wow. The one I talk to most is Murray Horton, who's at about 1.2 following the system. He does it down to the T, every little piece of the puzzle exactly how we have it.
Yeah.
So.
Yeah,
All right, guys, it's been an hour. Last chance. Andy, Rakesh, Frank, Tom. Anybody have any last questions? Karen, Eddie.
I'm good.
No, am I invited for tomorrow's live session?
I'm sorry, what's that, Frank?
Am I invited for tomorrow's live session?
Yeah, every day we have a live session. And so you'll get the trade alert tomorrow at noon, a little bit before, and then the live session is the YouTube live stream. So this is Zoom, where we can actually talk together once a week, and you'll continue to be invited to that. Once you do upgrade, you move to the Wednesday. Now it looks like some of our, we don't have an easy way of moving the paid people into the, out of the free into the paid. So we do have some paid members who are still coming to the free webinar, which is fine. We don't care. But Wednesday is only for our paid group. So you will get access to that webinar once you do upgrade. And that's just where we get into a little bit more of the nitty gritty, technical details.
Yeah.
So yeah, any other last questions out there?
That's pretty good to me. Okay.
Dean will try to reach out to all the folks who did attend the webinar, walk through the program with you, see what's going on in your personal account, so it's a little more private. So definitely look out for a call from Dean.
Yeah, and folks, if you want, go ahead and write down the number on your screen. Okay, put it next to your computer, or just save it in your cell phone. You guys can call me at any time. I've been investing for 16 years. I love to talk about investments, and I've helped so many of our members just get out of risky stuff, get defensive, and would love to work with work that process with you. I can't tell you how many of our members we've saved literally, tens of thousands, hundreds of thousands of dollars by getting them out of super risky, small market cap, extremely high risk stuff. And if you're over 55, I mean, that's just, that's crazy. So, I mean, I'm 34 and my risky stuff only represents 25% of my portfolio at this point. So.
Wow. That's pretty good.
All right, guys. Well, thank you so much for your time. Again, Dean will reach out to you to talk about your personal situation privately and see if we can't get you signed up and enjoying the program with the rest of our paid group. We've got over 100, about 120 members now. And I would estimate, I don't know for sure, but I estimate we have at least $10 million, maybe $20 million by now following the trades. And what everybody counts on is that we can protect your capital and generate small, consistent returns. So that's what we provide. This is not your growth strategy. This is not your let's try to double your money strategy. This is the safe 1 to 2% return per month with extra attention on the big picture. What's going to blow up your account? We can get out of the way of the big losses and pick up the easy returns month over month. That's where most people who do join our program need to be. And that's what we've been able to do a great job of. So thanks again for your time. Look out for a call from Dean so he can work with you individually, and trade alert tomorrow.
Yeah, and folks, feel free to call me as well. You know, if I'm on another call, just leave a message for me. I will get back to you as soon as I can. But always feel free to reach out to me too. But I'll do my best to, you know, walk through and call everyone. But a lot of times, you know, I'll get it stuck in a conversation for 30 or 40 minutes. So, but always feel free to reach out to me. If I am on the other line, just leave me a voicemail and I will definitely call you as soon as I can.
All right. Thanks, guys. Until next time.
All right. Thank you. Take care.